Let me tell you why you're here. You're here because you know something. What you know you can't explain, but you feel it. You felt it your entire life, that there's something wrong with the world. You don't know what it is, but it's there. This is your last chance. After this, there is no turning back. You take the blue pill, the story ends. You wake up in your bed and believe whatever you want to believe. You take the red pill, you stay in Wonderland, and I show you how deep the rabbit hole goes. to believe.
What's going on, guys? How are y'all? All right, let's do this. Let's see what's going on, guys. I'm not feeling the best today, but I'm gonna try to obviously push through it. Let's look at news this week here. Let's take a look at what's happening, and then move from there. Right, make a couple of decisions from there. You know. So the first thing that I'm gonna do here is let's break down this here. Huh. Obviously, last week's Friday. Let's look at what happened with NFP, because the NFP was dramatic. Our NFP reading was actually a lot better than expected.
Normally, what does that mean? Normally, that means a bullish market here. But let's look at the trade desk here, because we had historic drops yesterday, specifically on that Friday. Not on Thursday, but specifically on Friday, right? Okay. June spins fear. Analyst notes flagged oil spike and the Fed July hike risks for S&P. So the biggest thing here is the war continued. And regardless of kind of what happened with NFP, I think there's a lot of fear of the war going on. And this happened on Friday specifically, restarting. And it's creating this hysteria for what? This hysteria for a potential hike. Now, a potential hike would be catastrophic. Let's look at what's priced in right now. Or if probabilities have changed. Oh yeah, for sure. Look at that. You see that? Mm-hmm. They lied to you guys, remember? Our whole outlook has changed. You see that? This right here is bad.
Okay.
Remember, 2 weeks ago, the outlook was completely different.
Okay.
This was a completely different situation. Because a few weeks ago, we had potential rate pauses till 2027, then maybe one potential hike. And even more than that, okay, a couple weeks ago before then, you know, about a month and a half ago, they were still preaching about potential rate cuts. Now we're going into rate hikes again, and this is a huge problem. Rate hikes over time, if that's getting priced in the end of the year, I believe it might happen earlier. I believe it's going to happen in October. A 44% chance, or even 41% chance, is way too high for an October rate hike. I think something's going to break. Okay. So that was one of the biggest things that caused that drop. Okay. So let me actually kind of break this down here on the make a quick video here. Breaking this down because I think that would be pretty epic. So let's take a look one more time. Right. So that big dump that happened on SPX, let's take a look at why that happened. Analysts are starting to see that there's going to be a Fed rate hike, right? Obviously, this dumped markets here. And what are we seeing? A change in what? In the Fed watch tool and institutional probability. We went from potential rate cuts this year to now by the end of the year, a high likelihood of a rate hike. And most likely, if these are just based on probabilities, this is the best case scenario. We probably have another hike coming soon. And Trade DNA caught it. So what I'm looking for next year is there's a lot of speculation happening on this big, I want to talk about this as well, this big SpaceX IPO. I think this is the biggest scam I've ever heard before in my entire life. You can get into the IPO with as little as like $200, which even sounds like a scam. Okay. I think what Elon Musk has done, Elon Musk has, when he bought Twitter, the evaluation of Twitter, I think, went from like, what was it, 40 something billion to like 20 billion. Long story short, Elon Musk bought Twitter not with his own money, but with investors' money. And Twitter ended up merging. A lot of investors lost money because of Twitter. Now, Elon pissed a lot of people off. So, in order to be able to help get these people's money back, he merged Twitter with what? With his AI company, right? TerraFab AI. So now Twitter and TerraFab AI, a lot of Twitter is owned by this company, TerraFab AI. Now, you know what's funny is that Twitter and TerraFab.ai are all owned by what? A large stakeholder of TerraFab and X, or Twitter, is owned by SpaceX. Isn't that just wonderful? This guy is running legal Ponzi schemes right now. Stock market, the way they run it is it's just a legal Ponzi scheme, right? It's not a how could I say it? A Ponzi scheme. It's just a legal Ponzi scheme, right? So, what comes next? Now this IPO, all these investors that got into X, got into the AI company that invested all these billions of dollars, now have access to an IPO. The way an IPO works, remember, you usually need a couple $100,000 to get into an IPO. It's called an initial public offering. Getting into a stock before it goes public. It's like crypto, owning shares of it before it becomes public. There's usually over-the-counter transactions, OTCs, that happen where people share some of their stock, okay, of the IPO over the counter. So that means, like, let's say you're an investor, you want to buy into SpaceX for 20,000, 50,000. I have 50,000 worth of the share. Well, I can sell part of my shares. Let's say I have 100,000 worth of the shares. I can sell 50% of my shares to you
even though I can't cash out yet, but just on the hope that, you know, maybe you make money. That's what's happening here. Now, the problem here is that SpaceX IPO is allowing retail to get in, which is like a huge no-no. I mean, I don't even know how he got this to be legal, because now you can invest into it, you know, for just a couple $100, but it's a ploy. Okay, the whole thing is a facade. There's also you could actually look into this, a way for investors who already own SpaceX IPO to sell off. Okay, there's a secret term and condition where these SpaceX holders and investors can sell the shares before they become public. So these guys right now, everyone is selling. It's like they're all pumping up basically a crypto coin together. See who can get richest the fastest. And my assumption is that they couldn't get anybody else, which is why somehow, some way, they got the IPO to be public. And now, if you're a retail, which is considered anybody that has less than $100,000 to $200,000 in savings or in available cash, or makes less than $100,000 to $2,000 a year, they can get in. You're a retail. We are the retail in their eyes. Will I be buying the IPO? Absolutely not. I think liquidity is drying up, and this right here is a cycle of disaster waiting to happen. That's just my thoughts on all this. So is the AI bubble. The AI bubble is probably bigger than any bubble I've seen, because you have a cycle and recycle of essentially, you know, investors cycling from one asset into another asset, cycling into another stock and then another stock. I mean, it's like it's a complete shit show, right? So we're witnessing all that happen right now in last time. What I would say is this, because all of this is happening, I'd say stay away from these SpaceX stocks. I think we're going to see a dramatic drop here, even though in like, let's say SPX, as long as we break more structure. So I think the drop is going to continue. Now, let's take a look at Forex Factory. I think it's big that we do take a look at Forex Factory together here. Okay. I think it's very important. Okay. So Wednesday here. This week we have, right, CPI coming up. This is probably one of the biggest reasons the markets are going to dump. Okay. Look at that. This is why everyone's scared. Wednesday, the CPI year-over-year report is going up to 2.9. Remember a couple weeks ago, guys, I said that at 2.8, this is bad. This means a market top. The market's going to reverse here soon, because last time we were at 2.8, we were hiking rates, right? We were getting ready to hike rates. And that was before July 2025. This was artificial because of the tariffs. So I don't want to look at these. But let's look at these here. At 3.8, we were still holding the hike, right? It was bad. So 3.8 is right here. All right, we were just getting out of hiking rates and starting to cut, right? So what is my opinion here? If this ends up being as bad as we think it's going to be at 2.9, markets are going to dump because the chances of us raising rates are a lot higher. Now, market conditions have changed. Put this down on your sheet of paper. Okay? We are now changing sentiments. Put this down on your sheet of paper. There's a change in sentiment. Okay? I want you to realize this. And I think this is happening in live time. This happens every couple months and every couple quarters. Okay? I've witnessed 3 change in sentiments. We're now witnessing another one. And it happened on Friday. Okay? We went from a recession fearing sentiment. Okay? Sorry guys, I can't see that well. I can't see from far away. The screen is so big that I'm like far away. We went from a recession fearing sentiment now going into a inflation fearing sentiment. What does that mean? Okay. That basically means in a recession fearing sentiment, good news pushes the market up, right? But the last time I was in a inflation fearing sentiment was in 2022. Okay, and I remember in 2022 and 2023, I made a lot of money on gold. I'll never forget. It's one of my crazy that this was like over 4 years ago. This is happening the same time around the World Cup too. I remember the World Cup was actually happening this time around too. Hold on, give me 1 second, guys. 1 second. So let's go over this. Okay. So, in an inflation fearing sentiment, good news is bad news. Good economic news is bad for markets. Okay. So that means if we have a good earnings report, it'll dump markets. If we have a good jobs report, it'll dump markets. Markets will dump. If we have like NFP, if we have a very good, if let's say growth in manufacturing are moving upwards, it'll dump markets. If any of that, it will tend to dump markets. So you'll see the opposite take place with an inflation fearing sentiment. And I believe that we're starting that now. Granted, I did call us moving to the upside here with Dixie to 99 and higher. I do believe we're going to move higher. I do believe, I knew that we would break this zone, and I do believe we're going to go here. So as for the next prediction here, on a larger scale, now that we've called buys here, I believe we're going to come back here to the 101. And if we continue to hike rates, there's even a possibility that we revisit 104, even 106. And if that happens, guys, get ready for the biggest drop that you've seen in a very long time. Now, will it happen all at one time? It won't. You're going to have pullbacks, but it will happen. There's another thing that we need to be very aware of. And Trade DNA is going to have this as well. But I want you to be very aware of something here. Okay? the chances of a rate hike happening, okay, with the Bank of Japan, it's very high. Okay, ridiculously high. 94% chance that we're gonna hike rates. We still have that carry trade right now. That is going to push the markets back. I think we're going to experience a big dump. Okay, a dump that we haven't seen in a long time. Probably last time was in 2022. If you guys have more questions about this like recessionary time period, I did make a video on my Instagram that'll break it down a little bit more in depth. Okay, I am going to play it again. And I did call a market top in May. And unfortunately, I might be correct, right? So
90% of traders aren't seeing the reasons why. So I successfully called the last recession. It was because of the same market conditions and the interest rate cycle. The interest rate cycle essentially showcases that recessions usually arrive 12 months after rate hikes, and the market usually prices this in right before. Rate hikes create conditions where markets tend to bleed, and rate cuts create conditions where markets go through economic prosperity. Right now on the Fed Watch tool, the Fed is actually planning on raising rates in 2028 and potentially even in 2027. You also want to take a look at the oil supply shock. The Strait of Hormuz is still closed, and it accounts for 20% of the world's global oil. With inflation currently right now trading of above 30% of where it was, oil specifically, back in February and March, this usually over time creates market downturn. Another indicator is the Benner cycle. It's historically been able to catch market highs and lows throughout history over the last 100+ years, and it accounts for long-term market expansion and contraction. In 2026 happens to also be one of those years where there is a market top. And to get back to it, liquidity is tightening. Quantitative easing, which is essentially printing money, can't happen when inflation is super high. They can only raise rates. So with that capital tightening, liquidity will shrink and volatility will increase. Just recently, BlackRock announced its $27 billion private credit fund has limited its withdrawals for private investors. That is not a good sign. Not to mention the Japan carry trade, where $1 trillion in US treasuries is stuck in those Japanese markets. And if their yields start to increase, that capital will come back home. And if that happens, global liquidity will shrink. This almost caused a recession for us back in 2025. And guess what? It's Japan's goal to increase rates in the next 6 months. I mean, the writing is on the wall. Look at the headlines. Record credit card debt, auto delinquencies, spending pressure. The consumer is feeling it now more than ever. And that usually means the start of a recession. The pressure is building up, and in the next 6 to 12 months, we'll see how rates, oil, liquidity, debt, and this euphoria cycle will inevitably reflect.
damn, I don't know who that guy is, but he was correct. I'm just kidding, guys. I like to clown around here. Okay, so this is what I'm thinking, okay, because of this. Okay. Right now, I think we're going to see market downturn Wednesday for sure. And then we're going to see probably Thursday, core PPI month over month. Oh, wow. PPI expected higher than expected. That's not good. PPI month over month. These numbers you usually don't want to see high, because it usually, if you see these numbers high after Thursday, that means inflation is going to continue. The more that inflation's out of control, like I'll give you an example. Inflation moves from businesses to consumers. So last month's core PPI was actually pretty bad, right? It was like a lot higher than normal. So we witnessed our CPI to become higher. What does that mean? Last month, businesses were experiencing inflation. And what do businesses do? They put that inflation increases on costs, on services, because their margins go down on consumers. So that means our CPI was bad, okay? And because our CPI is bad and our inflation year over year is pretty bad, then that number goes up. And what happens when CPI goes up, okay? That stresses consumers.
and it forces them to stop spending more money. This by default brings margins down, and businesses then have to increase their prices more, and it's this endless spiral here. Okay, so this is why if you get inflation to become out of control, it could actually be very bad, okay, for a society. But now, look at the expectation Thursday for CPI. It's 0.7%. It's positive. So that's not good either, because if it is positive, that means next month's CPI report is going to be bad. And if that happens, that's going to increase the chances of us getting a rate hike. And by default, if that increases the chances of us getting a rate hike, okay, markets are going to start pricing that in. So what does that mean? Next month will probably be bearish for markets too. Okay, hint, hint, hint. That means we're going to hint, 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 sell, right? We're going to sell, right? Everything, it's crazy because all of this we talked about months ago, right? Even when markets were doing this blow on top, saying, guys, I don't care. I'm selling BTC.
Unfortunately,
I'm selling all this other stuff. Doesn't matter to me. And now I look like a genius, when in reality, all I did was just look at what? Fundamentals. That's it, right? So let's take a look at this blow to the bottom here. This is what we like to call what? A nice shift in momentum or break of structure, right? So let's call it that. This is a break of structure. On the 4-hour, it means what? We're selling off. Now, when's the next major break of structure? Did we break 8-day structure? Yes. Did we break, 8-hour structure, 12-hour structure? Yes. Did we break daily structure? Let's see. We broke it here, but that was kind of a fib level. A institutional level. Did we break it here? Not yet. Okay? The real factor that I'm looking for us, oh, look at that sell. The real factor that I'm looking for us to look at is a sell here. If we close below price here, the market is moving down here. See that? So we need to close below, maybe tomorrow. We get that? That is a huge sell. All right, that's what we're gonna look at. And look at that. Won't you see that order block here? Now, did it close above? It did. It did. Normally, that means for me is I would sell here. I would want to sell here one more time. Look at structure here. The sell would have been right here. You see that? This is kind of what I'm looking for. Kind of already mitigated this somehow. That. This is what I'm looking for. You see that? Okay, I'm looking for here. Right there. This particular liquidity set area is what I think we're going to cover. This area here. This area here. Let's look at the order block here. See the order block right here? That one intrigues me the most. Let's refine this downward here. This would be more external buys, not also. So now, looking at what?
This is what we're looking at. Gives me a better idea of what I want to, what I'm looking for, right? Potential 1 to 6. That's what I'm looking for. You see that? See that, guys? See how I came to that conclusion here? Does everybody see that? Or am I tripping? Does everybody see that? Or am I tripping? I don't know. Maybe I'm tripping. Who knows? Maybe I am tripping. So that's what I'm looking at. Let's look at US 30 here. Sorry guys, I'm still kind of sick right now. I'm not gonna lie to you. Dow Jones looks like a huge sell, to be honest. Broke structure here on this side. This thing's gonna sell off and come here. Very similar to SPX, mitigated an institutional candle here. Will probably come down to the 1.414. So this would be the area that you'd want to target. Now that price is already broken structure, you're now going to look on the internal zones here. Okay, look for a sell right here. That's your selling zone right here. Internal sells right here. You're looking at structure, short position here. We'll probably look for shorts on Wednesday as Wednesday comes. Okay. If some news does end up happening, like let's say the Iran war is over, then potentially you'll see some spike in volume. I can't control that. That's a black swan event. Okay. But I'm not going to be taking these trades until tomorrow. Okay. Not at all until tomorrow. NAS kind of gives me the same thing. NAS actually has yet to break structure. She has. So what you're gonna do, same thing, indecisional candle here, mitigated. You're gonna look for sells tomorrow, most likely. Be careful here with this buy zone. Most likely here, yeah, you see that. You're gonna probably enter sells right here tomorrow. This already got mitigated here. See that? This will be the sell-off right here. I already have this area marked. See that? There we go. Break of structure here. Very simple setup here. Very simple. Let's put a BOS here. This would be an easy 1 in however many trades. Like a 1 in 10, to be honest. Yeah, would be right. Oh, man. I'm sick as shit, guys. I am very sick. I'm not gonna lie to you guys. I don't know what's in the air. Something's in the air or something. Oh, there we go. You see? So remember I said this is what we want to look for, a break of structure to the fixed volatility. Yes, guys, this is what I've been looking for. And you know how I know there's more blood on the streets? Look at this. You we still need to mitigate and fill this. So there's a lot of filling, guys, right? This is just a small pullback for an extension. What does that mean? Guys, we're gonna sell. Wow, this is crazy. Are you guys seeing this? Do you guys understand this? Is it all making sense? See that? We got a lot of volume on the VIX that needs to get mitigated. But we're gonna see some runs to the upside. This needs to get filled for sure. Yields, let's look at how the yields are performing. Yep, going higher like we expected. 10-year, 2-year, all of it. Let's look at oil real quick. Oil relaxing, but still breaking structure to the upside. Let's see what happens. Whoa, look at gold. Look at gold go. You're gonna continue to keep selling gold here. I'm in sells and I took some profits already, but I'm gonna look for more sells tomorrow. We're gonna see a little bit of free falling here. Tomorrow specifically as well. Man, this is a nice sell. I really want a higher sell, to be honest. Don't see it happening. I would love to see like a price to skyrocket here, swipe liquidity, and then extend downward. That would be like my fucking dream. Because if we can get this downward extension, guys, just understand that we would catch gold, do a great pullback, and we would then start looking for buys. Does that make sense? Those buys would be legendary. Okay. So that's kind of what I'm seeing here with gold. The USD CAD still on that historic run to the upside. Nothing stopping that. GU, I haven't looked at GU. Shit. That looks like it's crashing. BTC getting ready to do another dump here. It's on its way to 60K. Yeah, for sure. I think I saw somebody in the chat say 60K. I'm going for 50. I think we have an easy chance, easy way to go for 50K. I think 50K is solid. I think you know what's gonna happen. Something will happen where it's a parabolic crash like it is here, like a wick. I think it'll hit 50 and then wick 42 and 43 and then come back. And then we're gonna start buying again. Because at 42, 43, we go back into the whole cycle period where Bitcoin will go on its 4-year cycle where it will be down about usually 70% from the peak, which would be 36K. That's what some people are saying. I'm saying 42. Some people are saying 35 to even like, 29K. I see this thing really protecting Bitcoin, but again, oh my, I'm gonna short. I'm in sells, so I don't really care. I'll keep these sells for the next 2 months. I don't really care. And MSRT right now is still pretty bad. Been talking about them for a while. We're selling some BTC, but they're still holding structure. The moment they start breaking structures, when you need to get worried about it, I think that they're going to try to bankrupt Michael Saylor. Nvidia is still holding strong, mitigating. A lot of these, like Apple's still holding strong. Amazon just broke structure here, so it might come lower. but Apple and Nvidia are holding strong, guys, so that's still some good news. All right, guys, I appreciate y'all. Love y'all. I will see you guys in the next stream, but other than that, I'll talk to y'all soon.